me say good afternoon, everyone. I hope you are well. I trust you are well. Today, I'll be just introducing to you Forex trading, what it is and what it entails. So basically, let us just get into it. What is Forex? What is Forex? In fact, let me do this. What is Forex? Just want to maximize it a bit. 14 will be fine. What is Forex? So Forex is nothing but a foreign exchange market, right? Yeah, foreign exchange. That's what Forex stands for, foreign exchange. So basically here, it is where most currencies are traded, right? So we trade currencies, right? Currencies are traded in this market, and also commodities. Others, we can also have shares that are traded in the market. We can have futures traded, and we can also have options. And then we can have indexes traded and indices as well being traded. There are a lot of asset classes that have been traded in the Forex market, right? So basically all of these are what is being traded in the Forex market. So in order for you to be able to trade, you need to have an account. For you to be able to trade, you need to have an account. An account can be a demo account or a real account, right? Therefore, how do you get the account? You get the account through a broker, right? So there are quite a lot of brokers. Here, I'll be only covering online brokers, right? Online brokers, and all online brokers use what we call MT4. And they use MT4. Some have their own platforms, but most worldwide, MT4 is a preferred platform, MT4 and MT5. So these brokers, they use MT4 and MT5, which is a platform where you can find, where you can execute trades. You can execute trades and see a lot of different classes of accounts. I mean, of assets that are being traded on the Forex market, depending on the broker that you're using. So you will need a broker. I'll be introducing about 3 brokers. The first one is JP Markets, right, which is a South African broker, which it's reliable. This broker is very much reliable. So basically about JP Markets, their headquarters are in Cape Town, right? They're in Cape Town, and now when you deposit with JP Markets, right, they give you 100% bonus of your deposit, right? You get bonus of your deposit, and if you make withdrawals, let's say you trade well and you make withdrawals before 12 in the afternoon, right, you will receive the money on the same day. Receive your withdrawal same day, right? Depending also on your bank, how long the bank takes to process the money into your account. But for them, as JP Markets, they would have processed your money fully. And you can also get a demo account, right? So, and the good thing about JP Markets is that it's a liquid broker. How do I mean by a liquid broker? It means that it's used by many traders, right? It's used by many traders. And a lot of individuals have withdrawn from it with no problems, right? So it's a liquid broker, and most individuals trust using JP Markets. Therefore, it's reliable. You need those kind of brokers, those 4- or 5-star brokers for you to be able to trade, right? The second broker that I'll be introducing It's binary.com. Binary.com. Under this broker, I will specifically focus on synthetic indices. These are your volatility indexes, right? Like your volatility 75, your volatility 100, your volatility 50, your bull markets. So basically, these ones are the indexes, not the ones like the dollar. No. It's those top 75 performing companies or top 50 performing companies, right? So that's the synthetic indices is all about. It's very liquid as well. It's traded and you can make a lot of money in it if you have the right strategy and use proper risk management. So that is binary.com. So this one is not a South African broker. However, also in terms of withdrawals, it's good, right? So it's rated about 5 stars. It's a 4-star broker, right? It's a 4-star broker, so it's also good as well. So this one we specifically focus on synthetic indices, right? Synthetic indices. So then I'll move on to my last broker that I prefer if you are a positional trader, which is IC Markets. Prefer IC Markets because now with IC Markets they have low spread, right? We'll cover the spread on the next video when I get into detail with Forex. So for instance, a spread is the difference, right? The difference between your asking price, right? Your asking price and your bid price, right? So that is the spread. That's what your broker charges you for you to operate under them. So getting back to JP Markets, they also charge commission on trades, right? Commission on trades. But I've seen some of the dollar accounts, the US dominated dollar accounts, there are no commissions charged. Binary.com doesn't charge any commissions. They have also beautiful spreads, tight spreads. You can actually enter trades. Like let's say with a $1 balance, you can also enter trade and hold for a while and make like, $20 and grow the account steadily. It happens. It can happen. So looking at IC Markets, they have low spreads, right? All the way up to 0.4. So that's how low they can go. And a recommended minimum deposit is a $200 deposit. Under these two, there is no minimum. You can deposit from as low as 10 rands, right? So now, going forward, here, binary.com doesn't give you any credit when you deposit. IC Markets doesn't give you credits when you deposit. However, it's a trusted broker, like very much trusted. This one, I would go with it 100% all the way. IC Markets, right? And IC Markets on their MT4 platform, they have a special feature of your MACD histogram. They have a special indicator of MACD histogram, which is used to see whether the market is changing direction or not. It's a called moving average of convergence and divergence. They have a special one for that. So these are the brokers that you will need. All of these are under brokers that you're going to need to trade, right? Obviously, for me, I used all these brokers because for each broker, I focus on a different thing. When I'm trading with each broker, I'm focusing on a different thing, right? So now you also need an MT4 platform, right? This one you can download it on its own separately, or you can download it per broker because each broker brings into the MT4 platform the asset class that they have. And they also bring into the platform any indicator that they have. So you will need an MT4 platform. One thing that I didn't speak about is that, let me just delete the MT4 platform here. just a histogram. Yes. One thing you'll need for you to have an account with a broker, right? How do you validate your account with a broker? You need to have a photograph of your ID. Please note, it's not a PDF, it's a photograph of your ID. And the second thing, you're going to need your proof of address. Proof of address, and it needs to be verifiable. I can give you an example. Your proof of address can be from a bank statement, a utility bill, or some sort of an obligation type of a document or a contract. So, but for myself, I prefer a bank statement so that it can be easily verifiable. You know that even the broker, when you withdraw, they pay the amount in the trusted bank, your own bank, right? So for IC markets, and binary.com, right? I'm just only going to focus on these. For IC markets and binary.com, they use only, you can only be able to deposit with NetBank, with FNB. FNB works with every, right? FNB and ABSA. As for Capitec, it's they don't allow international transactions which relates to forex. I'm not going to focus on RMB, Bitvest, and whatnot, because those obviously they should agree because they deal in forex. So these for the well-known or an average user, for depositing, you will need to use what you call it, FNB and ABSA and NetBank. For JP Markets also allows Capitec. So just so you know, JP Markets also allows Capitec, right? So that is forex, right? So in forex, you need to understand other things like you need to know what are your forex pairs. What will you be focusing on, right? Or before we can talk about forex pairs, right? We have pairs like we have major pairs, right? Then we have minor pairs, right? We have exotic pairs, right? So it depends on the broker. Then these pairs will be divided according to what the broker prefers. So just so you know, this type of pairs. So mostly of the major pairs, we have USD CAD, we have AUD USD, we have Euro USD, and we have what? USD CAD, AUD USD, Euro CAD, whatever. Now, in fact, Euro CAD is not really a major pair. USD, JPY. These, if you can look at these, especially these two, and also I forgot to include GBP USD. These three, these are the most liquid pairs in the market. These are they are the most liquid pairs in the market, meaning that they are well traded, right? They are traded by a lot of traders, right? So now, those are the forex pairs you need to understand. In this case, let's take GBP USD. GBP USD, GBP will then be a base pair, and now USD will be an adjacent pair, right? Adjacent pair. Meaning that if I buy GBP USD, right, basically I'll be buying pound, that is GBP, and selling the dollar, right? So what possibilities can happen? Meaning that here if the pound, right, gains strength, right, therefore I'll make profit. If the pound gains strength, I will make profit, right? If the dollar, in this case, the US dollar weakens, I will make profit, right? If the dollar weakens, I will make profit. So meaning if the opposite takes place, I will lose, right? So that's what's basically will happen. Don't worry, I'll go down to the MT4 platform and show you guys what is happening and what you can expect, right? So fine, so that's what's happening in the market, right? Most of traders, when they're being introduced to Forex, you'll be told that the number one rule, or NB, the number one rule is that you buy low, sorry, not boy, you buy low and sell high. This is at the demand and at the supply zones, because at that point the market would have been sold out, right? So the number one rule that we all know is that you buy when the price is low and you sell when the price is high, right? So when the price is very low, right, that point we call it an oversold area, right? We say the price is oversold. And then when we when we sell a high, or when the price is high, that point it's called overbought, meaning that we've bought enough to an extent that we've overbought the market. Now the market has to breathe, it will contract, therefore the sellers will come into the market, right? So moving on from that, we have different types of traders in the market. I'm just going to focus on the two and I will not break it down further, right? The first trader is a retail trader, right? Retail trader, it's me and you, right? These are the individuals, right? Those who are trading for themselves. It's me and you. That's what I'm saying, it's me and you. Then we therefore have, you can call them commercial traders. Right, you can call them commercial traders. These are the big banks, right? Those are the traders, right? And then from the traders, then you will have what you call it, market makers. The market makers are the ones who regulates the market. They control the market. They not necessarily they control the direction of the market. They just manage. In fact, let me just put it there. They manage the flow of the market. Sometimes the market goes beyond what they can do, right? However, they are there to regulate the flow of the market, right? So meaning that, let me give you an example. If you sell and there are no buyers in the market, meaning that they cannot buy what you're selling, the market maker would step in and buy. You see, if you buy and there are no sellers, the market maker will step in and sell. You see, so that's where the market makers come into play. So they ensure that there is liquidity in the market, right? There is liquidity. There is a willing seller and a willing buyer. If there are no existence of either of the two, they will step in, right? So those are the market makers. Sometimes market makers, they can manipulate. Please put this in your mind. They can manipulate the market, right? So this is not official, but you should just watch out. They can push the market beyond what technical we know, like technically what we know about the market. So with that being said, we have types of trading. And I'm just going to focus on the two that are known by majority out there, which is technical trading, right? Technical trading, where we mostly focus on pure price action, pure price action. And there's fundamental trading. Fundamental trading focuses on news trading, which is trading of the news in the market as they take place. News trading, trading on the news in the market as they take place, right? So for news trading, just to put in something here, for news trading, just to put in something here, we focus on major news, and mostly we rely on economic news, right? Not just political news, economic news, like the ones that relates to your GDP, your interest rate decision, your unemployment rate release, and your core retail sales, your core CPI. Like these are on an average the news that are more volatile in the market. So you just need to look out for them if you're a fundamental trader, right? So you can trade based on the market direction, or you can trade based on your stop orders, using stop orders, right? With that being said, how you execute a trade, right? You can either buy, right? You buy at the current price, right? That's instant execution. Instant execution, right? Isn't this okay? Instant execution. You buy at the current price, or you sell at the current price. Another one, instant execution, or you sell at a price higher than the current price, which is then defined as a sell limit. All right. And then you sell at a price lower than the current price, which is referred to as a sell stop, right? And then you can buy at a price lower than the current price, right? Lower than the current price, which is referred to as a buy limit. And you can buy at a price higher than lower. Why did I type that? Okay, higher than the current price, which is referred to as a buy stop. You see, so we have about 246 ways of buying and selling in the market, right? That's how to execute your trades, right? So now, when trading, it's a rough introduction. When trading, you need to first understand what's your direction of the market, the time frame, the time frame that you're looking for, your risk reward ratio, This is also going to be controlled by the volatility of your pair, account balance as well. Account balance as well. And then you can also look at your target price. And then if it's risky or not, right? So now for risk, there's something called risk management. It can be applied using the leverage, using the volume, and using the stop loss, right? So when trading, you need to look at your target closing price, the trade, right? This is referred to as a take profit. Take profit price, right? And then you also need to look at, if your trade doesn't favor you, where to exit if not favored, right? If not favored by your trade, where can you exit? Sorry, where can you exit? This is stop loss to minimize your losses. So these are the things that you need to take into account when executing a trade. Where's my enterprise? Where's my direction? Blah, 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 blah. So fine. So when trading, there are different time frames, right? The time frames, they differ. They go from 1 second, right, all the way to monthly and yearly. But the most ones that are used by technical average trader is 15-minute chart, 1 hour chart, 4 hour chart, sometimes 2 hours, sometimes 8 hours, and a daily chart and a weekly chart. See, these are the time frames that you can see the market in different time frames, meaning that for every 15 minutes on an M15 chart, there's a candle that is going to be formed. For every 1 hour on a 1 hour chart, a candle is going to complete, right? So those are things that you need to look at. So you need to understand them, right? Moving on. So you will need to also understand candlesticks, because now most traders out there, or a better way of understanding the market is through trading using candlesticks. Right, using candlesticks, right? So a candle can either be bullish, meaning that is going up, or they call it in the bullish direction. Okay, going up, bullish direction, right? Or bearish. The bearish direction is going down. You know how a bear attacks you? It squeezes you down, and how a bull attacks you? It takes you up by its horns. So that's an easy way of understanding candlesticks, right? There are a lot of candlesticks to be understood. And that one is it's not for this lesson, but just know that I'm just giving a rough idea of what's happening in the market and things that you will need to consider when you are starting your trading career, right? So now back to the account. I spoke about something called leverage, right? Leverage. So leverage is the extent of risk or volatility that you are willing to take on a trade, right? Or pay your account. So mostly leverage, they range from 1:10 all the way to 1:3,000. The higher the leverage, the higher the risk, the higher the losses, and the higher the profits. So the leverage that I advise, it's a minimum of 1:500 all the way to 1:3,000. But now you need to be careful, right? And now the type of the account that you will be using or that you'll need to use, account type. You need to also understand this when you're opening an account with a broker. We have different accounts that can be opened. You have a standard account, right? And then you have an ECN account. You have a zero account, a mini lot account, a micro account, or whatever. The account that I prefer or that I would advise, it's an ECN account, because here the fundamental principle of using an ECN account is that you are not allowing your broker to affect your trades, right? Your broker cannot manipulate the trade. Trades are electronically executed into the market without any interference of the broker. So even if the broker manages to manipulate the spread, they won't manipulate it to a greater extent as in their standard account. So an ECN account is much more preferable, right? So 1:500 leverage, or all the way to 3,000, and the account must be an ECN account. So each account or your account needs to have a currency. So I'd prefer you use USD or your own country's currency if you prefer it, but I prefer using USD or pound because I can make a lot and convert it, and so yeah. So currency preference for me, it's ZAR or USD. ZAR is South African rands, right? So the minimum that I would suggest a person can deposit in South African rands, it's something like 1,500, or you can go as low as you want, as much as you know that you're going to be patient in growing your account. So basically, that is the introduction to Forex trading. There's quite a lot to take it in. And trust me, we have not yet done anything, right? So now I want us to shift. I'm just going to save this document just so it's needed by others. Forex 101, just quick browser of Forex 101. So I want us to go and look at the broker that I was talking about, JP Markets, and also their platform. JP Markets have an online platform here, right? On an online platform, once you've opened your account, right, you need to come to the dashboard, right? And then you click open an account here. Opening an account here, then you have account setting, open an account activity, blah, 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 blah. So you need to choose your currency. Give an example, it's ZAR. Therefore, remember I spoke about ECN. Even the broker, the demo, I can choose ECN. Then you can specify an amount which you want to deposit. Then you need to enter your password and approve the account. Therefore, this is it. You see, I have a trading account here. I've already downloaded their platform, so there's no need for me to re-download. But I'll go back and set it up with you so that you can see. Now, I'm going to open their platform, meaning the MT4. I'm going to open their platform, right? And then I'm going to log in into the demo account using the demo details that I have been given by the broker. I will log in here. Don't focus on the platform. I will log in here. This is the amount that I have. This is the credit that I told you about. My equity is 20,000. It's a demo account. So now, most of the time, when your MT4 platform is done, when it's opening, it will give you 4 window charts, right? Those window charts will show different pairs. You just need to maximize one of them, and you need to set it up. Setting it up, it's easy and very fast, right? It can be done by anyone. So I prefer that my chart, the background of my chart should be white in color. So I'll go here, choose black and white. My candles, my bullish candles are going to be white. My bearish candles are going to be black, right? So I come to common. I don't want to see the grid lines. I just want to see period separators. So out and click grid lines. Therefore, it will eliminate those grid lines and it will show period separators, right? I don't want to see these volumes or whatever the gaiters, the oscillators they have. I don't want to be clean. So I will right click, delete the indicator, right click again, delete this indicator, right click, delete that indicator. These 3, I don't mind having them. These are the alligators, I don't mind having them. I can just maximize their colors. I mean, the font, and then make it bigger so that I can be able to easily see them, right? So then I don't want to see this this buy and sell here because I can do it here, but okay, let me just leave it. So now my chart is clean. You can see it's very much clean. I have 1 minute chart, 5 minute chart, blah, 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 right? So how you buy and sell? Okay, before I go there, let's just do this. Now I have selected a template. I right click on the chart. I go to templates here. Then I can save my template as I want, right? Saving it, I'll name it Ezra new, Ezra new, or Ezra, what is this, alligate. You can see my platform now. Every time when I when I go to a pair like this one, the pair will be like this, or when I just go to a pair here, click chart window, it will show me a new pair on this side, right? And then I will just click as on the templates. This is a template icon, right? Click a down arrow, then I'll choose Ezra alligator. Then it will set it up the way I want to see the chart. You see, therefore it's much easier for me to understand it, right? On this side, on the left bar, this is where your pairs are. And under view, you just click in view and click symbols. You can add any Forex pair you want that is not shaded. Like for instance, EuroNOK, if I shade it, I'm adding it. You see here, it just appeared. EuroNOK, right? And then the others which I can also add, GBP OD, GBP CAD, GBP NZD, GBP ZAR, NZD CAD, NZD CHF. You can see now my Forex pairs have increased, right? So that is what is happening. Now, coming back to the platform. By clicking file, going to log in to trade account, you can log in into different trading accounts, right? Like for instance, if I log in to which account, the 36, yes, 3677, it has automatically saved my, so I can log in to my live account, which is 3677. I used to trade on this account and then I withdrew. As you can see, it made a loss 102,000, but I did withdraw 396,000. But if you can check the history, you'll realize that my only initial deposit was 200,000 and I made profit, redeposited 250,000, made a withdrawal 60,000, 140, 110, 58,000, 81,000, and deposited 40 and took it out again. So you can see there's been quite of some growth on this account. So back to the demo account that we created, login, looking for account that we created. That is the 10,000 account. So now, for every chart that you have opened, you will see it on this down bar, on this down scroll. You can see EuroCAD, GBP, CHF, odd USD, Euro, odd USD, JPY. You can see all of them. You can see all of them, right? So we were on the NASDAQ 100, right? So now let's say you see that, okay, I've analyzed the market. I'm seeing that on a 15-minute chart, the market is going up. I want to buy. The question is, how much are you buying? You click new order on you buying, then you have to select your volume. Okay, I want to buy 0.05, right? Then I have to change my volume to 0.05. Therefore, I buy, right? If I want to put a take profit, remember take profit, it's above, right? So let me say I put 8260 as my take profit. That is where I want my profit to, my trades to close when they reach that price. And I make 877 as my stop loss. Then I buy the market. You see, immediately when I buy the market, this is my trade level where it is. This is my stop loss. If you can just put your case on the stop loss, you see how much you stand to lose. Let me show you. I stand to lose 5,448 rands. Then I stand to make how much? Let me see. Stand to make 9,304. So let's quickly pull out a calculator. Stand to make 9,000. I stand to lose 5,000. What is my risk ratio? I have a 1.8 risk ratio, right? I stand to make 1.8 times what I'm supposed to lose, right? There's still strategies that we're going to discuss. It's fine for now. So now, when you open here, looking down here, this is the profit that you make. If it doesn't have a minus, means it's a profit, right? This is the commission that they charged us to execute the trade. This is the price that we entered the trade. This is our stop loss. This is our take profit, right? So basically right now we're making around 500 and something rands with the trade that we just opened, meaning that our analysis is good, right? So now let's say now you've made that trade, you want to protect your profits. You don't want to lose 5,000. All you can do is after your trade is in profit, you can move your stop loss just closer or above entry price. Let's say somewhere here. You have to accept first, then it will take you back. Then remove your stop loss somewhere here. And then now when the candle goes down and touches this line, it means that it will close your trade with a profit of 438 rands. But it still has a potential to continue further up. And now when it continues further up, you will still be making more profit. Let's see. Now it's about to touch our line. It touched our line. The trade is being closed. How much profit did we make? We made profit of 416 rands. That's where the stop loss is, you see. So that's the usefulness of the stop loss, to protect your profits and to also save you from risking a lot, you see. So now I see it's still going up. What do? I come here, I want to increase my volume because I don't want 0.01. I want to make 0.05. Then what do? I buy at 0.05 at the market, right? And still estimate the selling price. I can just move my stop loss, take profit by just taking just clicking on the trade, dragging it up. Stop loss, same thing, taking on the trade, dragging it down, you see. Therefore, I stand to make how much? Stand to make 3,000. I stand to lose 2,000. You see, so there's still a better risk ratio. So you must always have a better risk ratio for your trades, right? So now I bought NASDAQ, NAS 100. If it goes in profit, right, meaning that it's gaining strength. If it goes in a loss, meaning that it's losing strength. I can also increase my trades every now and then by just saying buy, right? I can buy more, right? You can see the buy is in profit. All of the buyers are in profit. I'm making 1,000 rand, right? Which is good. Then if I feel like I want to close before it hits my stop loss, I can just cancel here, cancel the trade. It's closing the trade, right? Cancel the trade again, it's closing the trade. How much profit did I make? 1,273. You see, so it's easy to make money in the Forex market if you have the right skill and the right precision. But the most important thing for you to have is the psychology. In the Forex market, the most thing that is required for an individual to have is the right psychology, right? So I haven't entered into technical trading, blah, blah, blah. I was just showing you how to see the market, right? So if you want any Forex pair that you want to trade, you can just drag it, drop it, drag it, drop it, drag it, drop it, drag it, drop it, all the way, like however you want, right? And if you can see it from different time frames, daily chart, 4-hour chart, 1-hour chart, 30-minute chart, 15-minute chart, 1-minute chart. There it is. You see, this one you see. Now there's another thing. Other pairs, like exotic pairs, they have a lot of spread. You can see here, I bought this trade here. The price is on 10,83700, but now it put it very further than where it's supposed to be buying. If you go to GBP USD, we'll just also insert the same. Then GBP USD is, let me go to 1-minute chart as well. I buy. Look what happens. You see with GBP USD is closer, right? Let me go back to the NASDAQ 100. NASDAQ 100, alligator. Say I go to 1-minute chart, I buy. Immediately exactly on the same price, you see. So you need to be able to see those things that are happening in the market, and you need to identify which pairs are risky, which are not risky, blah, 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 blah. So I'm just going to close because I took these trades like just to establish what is happening, right? So you need to know those things, like, and now you also need to know when the market is overbought and market is oversold. So those things are the other things that we're going to discuss on the next video, which I'll be taking you to introduction of technical analysis, right? So ladies and gentlemen, thank you very much for attending this lesson. Let's see what else our first trade. The take profit of first trade 260, it was too much. 194 second trade, meaning that somewhere it was closer to being hit, right? Just that now the market has reached its overbought price level, right? So it's not a problem, but I can show you it's very easy to make money in the Forex market, like literally that easy. Look at this now. You see the price is about to fall, right? It's busy trying to reject down. What you can do, you scalp, it's called scalping. You sell as much as you like as the price is busy rejecting around this point, and then all you do is close your trades as you get into profit. Obviously, this method is a risky method. It's for those who do not know what they're doing, right? But if you know, okay, this price here is trying to reject, it's trying to fall down, what can I do? How can I take advantage of the market? Therefore, by doing so, you can be able to risk as you want, to make profit if possible, or to lose your entire account. In fact, the lesson has been established. You can lose the entire account with the NASDAQ, right? But with other pairs, you can also make a lot of money. So in this area, you need to understand what is going on. So ladies and gentlemen, thank you. Enjoy your day. See you on the next, on the next video.